Welcome back, welcome back. You know what time it is, 7:30 a.m. Eastern Time. 7:30 a.m. Welcome back, boy. Time flies when you're having fun. Welcome to a Wednesday edition. Happy hump day to you guys and gals. This morning, we're going from the screen to the floor. I'm here in Los Angeles, California. I've got my charts up. I'll provide you guys with a technical approach, a top-down, meaning we're going to start with those slower time frames and work all the way down to see what happened overnight. And we're going to analyze the overnight trading session. We're going to analyze what's happened over the past few weeks, the past few days, the past few hours, and we're going to anticipate the direction at the open. Now, this morning prep that I'm going to go through this morning is just one of the things that we cover every morning in our live trade room starting at 8 o'clock Eastern Time. So come out and see me here at School of Trade. Now, once I'm done with you, I'm going to toss you all the way across from Los Angeles all the way over to the NYMEX exchange, and we're going to listen in to see what Marty's seeing from the NYMEX exchange. Now, this is a pretty exciting opportunity for us screen traders. We don't get the chance to hear directly from the pit ahead of time each morning. So consider this to be a very powerful and a very unique way to prepare each morning. Marty's our pit analyst, and he's going to be providing us with information on direction, multi-market divergence, looking at market internals, option prices, and of course, those always very important, those pit specific, those pit session trading levels. Those pit session trading levels are very important, especially on a market like crude oil. Since the market on crude oil is still very active in the pit, we know a lot of the major moves happen first in that trading pit, right? So we're going to listen in to hear what Marty's saying. It's always a great look to see what I'm seeing and then see if that lines up directly with what Marty's seeing. All righty? Let's get started. First thing I'm going to do this morning is I'm going to talk about the dollar. The dollar has been on the move lately. Boy, if you've been watching the dollar, it's been some of the most exciting dollar moves we've seen here in the past few months. The first thing I'm going to do is I'm going to look right to a 60-minute chart on the dollar. And when we look at the dollar index, I want you to see two key components here. First, you'll see the bull channel. The bull channel on the dollar tells us to continue to look for rising prices. And even more so, this bull channel, if you zoom in on this channel, you'll see we've got nothing in our way. We have 83,165 here on the side, but guys, we've got nothing in our way right now. As you can see, it's just a hop, skip, and a jump up to 83.47. So we know the bull channel on the dollar is telling us expect higher prices on this dollar. And what do higher dollar prices mean? It means we've got more cash in our pocket. What's more cash do? It gives us more confidence. What does more confidence do? Well, if I'm a small business owner, I'm going to open up a new business. If I'm an already existing business owner, I might expand that business. If I got kids that are home for summer vacation, I got a little more cash in my pocket, I'm going to go to Disney World, right? Fill up the gas tank, load all the kiddos in the back of the pickup truck, right? And head to Disney World. So we know that consumer confidence numbers have been on the rise. Yesterday, we saw home sales numbers spiking higher. Guys, everything shows signs this USD is going to be on the rise, and with that comes a stronger demand of crude oil. We also know that that negative correlation, that fundamental negative correlation between the dollar and other commodities, gold, crude, euro, has a negative correlation. Now, I have a funny feeling this morning that we're going to see a little bit of two-sidedness on crude oil. But eventually, we're going to see its true colors today. If the dollar tells me if the dollar is correct, we should see prices going lower on crude oil. However, be aware, crude oil has that secondary aspect, right? That secondary aspect today, and that is the confidence level. So if these consumers are confident, right? We got news this morning, GDP, we got inventories today, 10:30 a.m. for inventories. So if we get some bullish news this morning, if the consumers are confident, this rising dollar is ultimately going to react in rising crude oil prices. So we got to remember the dollar correlation is important, but what's even more important is those consumers that are confident right now, they're going to push that crude oil price higher, right? Because they're going to have more confidence to go start that new business. They're going to have more confidence to take that vacation with the kids, and that's going to require crude oil. Right? The demand for crude will rise, the prices will rise. So this morning, we're most likely to see rising crude oil prices if those consumers are confident, so we're keeping a close eye on personality. At the same time, though, this dollar pushing higher will be a fundamental drawing down of crude oil. It'll be interesting to see what happens this morning. I'll be keeping my eyes peeled to see what the market personality looks like right out the gate at 8 o'clock. If the bulls are clearly in charge, well, we get the answer to our question. If we can't quite tell who's in charge, well, then we have to wait. And in my opinion, now we move from the dollar index now over to a 60-minute chart. And here in a 60-minute chart of crude oil, what I want you to see here is a price wedge. This price wedge, higher lows, lower highs, we can see support levels below us. This is really important now because we just had the dollar rising, which tells us, well, if that correlation is correct, then crude oil futures should be falling now. But at the same time, we also know that little wrinkle in crude oil. If the consumers are confident, they're going to consume more crude oil, they're going to have more confidence, demand will increase, and prices will increase. So this chart, the 60-minute chart, leads me to believe that we need to stay open to whatever direction this market gives us today. I don't think we have the clue we need just yet to say we're bullish or we're bearish. I'll tell you though, if I had to guess right now, I would lean on the bull side. I would lean to the bullish side. The reason I say that is because of home prices the last 2 weeks, because of consumer confidence the last 3 weeks, because of the durable goods orders we got yesterday. The durable goods orders showed a silver lining in what has been a year of very lackluster manufacturing reports. By the way, all of this commentary in our morning newsletter posted in our beginner's course this morning. So we talk about the news. No, the news tells us we should see the bulls in charge. But the dollar index tells us, nope, we should see the bears in charge. As you can see, we don't quite know exactly the specific direction. I'm going to err on the side of caution. I'm going to be buying pullbacks with new higher highs, selling retracements with new lower lows. I'm going to be looking to buy the lows of this price wedge, 94.61, sell the highs of this price wedge, 95.88, 95.75. And of course, as I said earlier, if somebody put a gun to my head this morning, I would say we're going to the upside, right? That's what I would assume because of the fundamentals kicking into the market. And most importantly, just the level of consumer confidence that we're seeing coming out of the economic news. So two-sided trading, but a bullish tone to the market this morning on crude oil futures. And as you can see, we've got plenty of room here to go right up here into that top of that wedge. We've got more resistance waiting for us here at 96.05, so keep an eye on 96 even, right? That'll be another easy profit target for you as we move higher this morning. The 60-minute chart gives me some definite levels to use. Let's zoom in, though, a little bit closer, and let's look at a 5-minute chart. The 5-minute chart this morning shows us a little bit more detail, and this is going to lend a little bit more credibility to the bulls being in charge this morning. You can see here definitely a symmetrical pattern setting up right now. As I've been typing this up this morning, this is developed. This is definitely a symmetrical pattern, so we do expect to see prices keep trying to rise here. If I had to guess, I would say look for that previous high of day at 96.17 being tested here later on this morning, right? The previous high of day, that'd be the high of day from yesterday, from Tuesday. So we can see here, looking at this quickly, we can tell we've got a relatively average overnight trading range. We've got about a dollar move, right, but about $1 higher here coming out of London. That's about average. That means we're probably going to see either a trending or a sideways range. If this was a really wide range, I would say we're likely to see sideways trading. If this is a very, very narrow range, I would say get ready for a breakout. But this is your average range. So we don't really have that easy clue. It's not a really wide range. It's not a really narrow range. So we're going to have to look for something else. Again, I'm going to assume we're going to be bullish here. Resistance levels as we go overhead. Again, assuming we're rising this morning, the first thing I will always do is I will always look for the reversal coming out of the reversal zone. That's a gimme. And then I'll use Fibonacci-based support levels using the low of the day today, and then, of course, whatever high we see. Okay, so that'll be the profit target. So as price goes higher, I will always look for the reversal in that reversal zone. But once we get above this 95.67, then we could see all hell break loose. We could have the gas pedal hit the floor, and this thing could definitely keep going higher. Take profit targets up, next resistance at 96.05. Again, this 96.17 is a big, big number on our radar this morning. So 96.17, I've got 96.47, and of course, you'll see all the way up top here at 97.17, that would be where you'd be ripe for a reversal. All right, so as we go higher, I'm looking for the reversal first. If this thing takes off, though, I'm going to be buying pullbacks as we go higher, taking profit targets at each of the levels above me. Most importantly, though, as soon as I see those buyers fail, if we slip and fall, that's my signal now to look for the price reversal. Remember, all these levels above me are resistance, which means I can use them as profit targets if I'm long, or I can use them as locations for a price reversal to get short. Looking at the levels down to the downside, we can see here we've got levels here at 94.82, 94.69, 94.51, and 94.40. I've got 94.27 and 93.97 here to the reversal zone. Again, as I said, going higher, I will always look to buy the fake out breakout of the overnight trading session. 93.59 if we break out to the downside. Now, this is where we're going to have a little bit of concern here. Again, we get a bullish tone of the market. I am going to be on, I'm going to be on the look for a fake out breakout here. All right, I'm going to be on the lookout for a fake out breakout. So we're looking for reversal at reversal number 1, reversal number 2 at 93.17. I've got the previous low of day here. Which one is this? Sorry, guys. This is, yep, okay, so this is the one you want right here, 92.67. I've got 93.17, 92.67. That's my sweet spot. That's that's Monday's low of day, 92.67. Tuesday's low of day is right there, right? So we're already got that one in the mix. But boy, if we head down to Monday's low of day, that's going to be another spot here. Look for another price reversal down at 92.49. So, as I always say, guys, I'm not predicting. I only react. As price goes lower, I will react to a rising price by buying pullbacks out of the reversal zone. I will react to lower lows below 93.97 by selling retracements. I will react by taking profit at 93.59 and then looking for a reversal. Once I see the reversal, I will react by buying pullbacks. Alrighty? Miles, great question. Are my lows of days based on PIT or Globex? Great question, Miles. My lows are always based on Globex. Ultimately, I use the 24-hour session time frame on all of my charts. Now, Marty's going to be talking about the PIT session levels, right? So instead of using the 24/7, Marty's going to use the RTH, right? The NYMEX Energies RTH, right? The regular trading hours. So his chart will look a little bit different. And speaking of Marty, I think it's about time we hear from Marty and see what he's seeing on the trading floor. Miles, great question. I'm using the electronic trading hours, or you can easily use the 24/7 session template. All righty, let's listen in. Let's see what Marty's got going on today, guys. I'm going to have this chart posted for you quickly here on the blog today. All my notes are already posted on the blog. And let's see what we got going on here in the NYMEX exchange. Marty, how are we doing out there? Thanks for joining us. Are you seeing this bullish tone of the market as well? What do you think out there, my friend?
Yeah. Good morning to you, JJ. Good morning. Yes, so there is somewhat of a bullish tone to the market that we can work our way back up to in anticipation of numbers. And then, of course, after the numbers, that's kind of going to be on the other hand. So let's first and foremost talk about data, right? So we have some data here that I would like to speak about. First, what we saw was API numbers hit the board last night, and those are going to be our leading indication on the DOE EIA numbers that were getting released at 10 o'clock. Keep in mind, we also had purchasing applications out today, this morning at 7 a.m. They come out just about 3%, average of 3 to 5% here. Keep in mind, GDP is hitting the board at 8:30 today, along with corporate profits, and at 10:30, the big all-awaited EIA petroleum status report, the one that we are all keeping our eyes on. So let's simply quickly talk about those numbers that were released last night. We saw crude oil inventory numbers. Crude showed a draw of about 28,000, only 28,000 draw. They were looking for about a draw of 2 million, so you can see we kind of fall short of the expectations that were delivered for the API numbers. We saw Cushing show a build of 706,000 barrels. Gasoline show a build of 1.3, and distillate show a build of 527,000. So you can see If you compare them to the expectations, they fall short on each one. But overall, I'm looking at these numbers in just a whole, almost as a preliminary number for the DOE EIA numbers, so we can kind of possibly see if this lines up. Let's look at forecasts for today's numbers. Again, these forecasts, they change. Platts always lets out their latest amount of numbers before the number comes out, about 10 minutes before the number comes out. So this forecast may change, but let me give it to you right now what I have. So for crude forecast, this is what they're expecting for today's number. Negative 1.17 million barrel draw, so they're looking for a draw of 1.7 million. For gasoline, they're looking for a build of 855,000, and for distillates, they're looking for a 600,000 barrel build. So that's basically what they're looking for today. That's what we're going to be looking for. Obviously, anything above any type of draw, any type of build, or anything above that 1.7, again, we're going to be looking for selling opportunities. Anything above or any type of draw, anything below 1.7. So if we get a draw of like 2 million, we get a draw of 2.5 million, that would be absolutely bullish. So again, any type of draw below 1.7 will be bullish. Any type of build or anything that falls short of 1.7 will be bearish. All right, guys. So now let's start them off by taking a look at some charts here. So you can tell that first and foremost that we kind of have a multiple market divergence here, kind of sideways positioning, if you will. That's right. I'm looking over here on June 26th at our crude, Brent, and RBOB and heating oil. And this morning we used the multiple market divergence, and we look at all these markets because they all trade in the same pit, and these markets tend to follow each other. So right now we're watching crude, RBOB, heating oil, Brent, all pretty much sideways here this morning in somewhat of a sideways chop trending trade. Right now this morning I'm looking at your Brent WTI spread, and the spread's about 625 or so. And overall, the spread's kind of mid-range, but I would still call it a little bullish. As we look over at our calendar spreads, they're actually all bullish as well to unchanged. So our calendar spreads, our spreads this morning are telling us, hey, there's sideways to higher trading, as JJ mentioned. So that's the thing that kind of toots my horn a little bit when JJ was speaking about higher prices. But again, we're looking at sideways to higher prices, sure, and we're going to look at some charts to support that as well. So check the multiple market divergence, checks off with that. This morning we have your dollar trading a little bit higher this morning at 83.14 even, again breaking out into the 83 handle on the dollar, which we haven't seen in a while. So the dollar's higher, your euro's lower, and the rest of your commodity currencies are lower to sideways to unchanged. This morning we look at volatility, and volatility is still quite big here. Again, that's been the whole factor to this move. We've been watching vol kind of holding firm for the most part around 25%, and that's kind of that's kind of bullish now. Volatility is going to hold about 25%, around 95 bucks. That's very bullish. Now, throughout the day, we're going to be looking for falling volatility if we want to still go higher, because as you look at skew on the options chain, you'll see that there's a little bit of lower volatility in the higher strike levels above. So if we can fall and vol come in maybe 22, 23%, right? Maybe even 20%. If we come into that, then we'll be very bullish. So we're watching volatility. Of course, is always the case, and we'll get a little bit more in depth to those. But again, as I mentioned, the spreads are looking bullish. Crude, RBOB, heating oil, Brent sideways. Brent is actually holding levels above 101 even now. Again, we're 101.40. And the spread, as I mentioned, around 625. So before we look at our levels here, let's just take a quick look over at our chart here real quickly. Again, I'm just going to pay some attention to crude. As you can see, we are pretty much here in that wedge. And what does a wedge mean? It means that we're simply just in a very consolidated range at the moment. And again, we're consolidating. We're getting narrower and narrower in this wedge. As you can see, we had a pretty wide red wedge yesterday, and now we're kind of narrowing in. And we're also here in somewhat of a bullish channel as well. So we kind of got it to the low of the bullish channel after the numbers came out. So last night numbers came out, right? And they were bearish, so the market pushes lower. And we found some support around that 95.25 level, 95.30 level, 94.40. So we found some support at the 94.25, 94.40 reversal zone, and now you can see we're buying the low of the wedge in the channel, and now we're kind of towards the middle end. So we're not going to necessarily fiddle in the middle, but we're going to kind of wait and see where we open up, and that's going to be an important factor to this day. So again, we could probably make our way back up to the 95.5. 95.5 is definitely an important line in the sand for me that I want to keep an eye on today, and obviously it's an important level because you know, a lot of traders are looking at that big round number, and yesterday it was a very important level as well throughout the trading day. All right, so let's take a look at some levels here, and then we'll talk about some volatility adjustments here. What I got for you here is your crude this morning, and we can see that we have open interest this morning kind of rising, or holding steady at 280,000. We've been holding steady around this 280,000 level for the last 5 trading sessions now as we came into roll. So this is quite important to see that open interest is holding steady. Possibly these shorts are squeezed out of the market, and there was a little bit of some long covering back in here. Now we're pretty much getting long here as we saw yesterday. Very mixed trading day overall yesterday. In the pit we saw very sideways trading. Paper was kind of still establishing somewhat of their net long position towards the end of the day. In the morning though they were kind of selling, and they were kind of just trying to sell the hell out of the market, and they did a good job of it, and they pushed it lower yesterday in the pit session, but then all of a sudden we saw them kind of come back to life afternoon and start to come in and buying again. So in the pit we did see bottom line. At the end of the day, paper buying. Locals were obviously two-sided into the closing bell, and they were all flat, as they always are most of the time. But we've been watching in the options pit now. It's from the outright pit to the options pit. We did see some strike levels trade. And again, it's pretty neck and neck here in terms of just, so these strike levels that were traded. We saw Augie 100, Augie 102s, and Augie 102 halves trade over 5,000 times. Well, we saw that 90 put also trade about 7,000 times. So again, Augie 100, 102, 102 half calls trade over 5,000 times, all 3 of those strike levels together. We saw the short-term weekly calls as well. There was a big purchase in the short-term weekly calls by a big dealer here. They bought 95 halves, and then they bought 97 halves as well, over 1,000 times, and that's pretty big for the weekly options. Now on the put side, as I mentioned, there was a lot of interest in that 90 put, and there was actually about, 8 other strike levels that traded over 2,000 lots. So when I say that, I mean the 80, 83, 85, 87, 88, 89, 90, 92, and 95 puts. They all traded over 2,000 times, with the exception of the 90 trading 7,000 times. So you can see they're kind of targeting here this downside. But again, it could just be large locals massaging risk around. They could just be kind of putting their stops down below, or just some support where we can find. So again, that $90 level was the one that was traded the most, even on on skew for calls compared to puts. But you also want to just keep in mind they're massaging risk around, they're moving money around this market. Alrighty guys, so let's look at our pit session level from yesterday here. Your high from yesterday is going to be up at 96.08, your low down at 94.72. We ended up closing the settlement day at 95.32. We had about a 73 penny downtick yesterday again, so net change was negative 73 cents. We had about a $1.36 range. Today, the daily pivot on the crude is going to be 95.37. Once again, that's 95.37, which we are trading below at the moment. Again, we're not too far away from that daily pivot, so we're going to have to keep an eye on that daily pivot and see if we open above or below that daily pivot for the opening bell in just about an hour. So once again here, that is your daily pivot, 95.37, which we are trading below, and we're going to keep an eye on for our pit session opening bell to see if we open above or below it. Resistance above, I have 96.02. I have obviously the high from 96.08. I got 96.73 and 98.09. Again, that's some resistance above. Support down below. What I have for you here is going to be 94.72. That's yesterday's low. I got 94.66, 94.01, and 92.65, sorry, 92.65. So those are your levels of support and resistance above and below that we really want to keep an eye on here. That's most of our floor traders are going to be watching, as well as the support resistance that me and JJ discussed on the charts. So guys, that's going to be another very important variable here into numbers. Alrighty guys, let's talk now real quickly here. Open interest currently stands at 279,135. With that, implied volatility is at about 24%, and the OVX, that's the cash vol, end up settling the day at 23.50. Natural gas, ladies and gentlemen, here, your high, pit session high from yesterday was 377.40 in the August contract. The low was 366.80, and we closed and settled the day at 367.30. Today, your daily pivot is 370.5. Once again, it's 370.5, with resistance above at 374.20, 381.10, and 391.70. I got some support down below at 360.360, 359.90, and also 349.30. Once again, open interest is 173,896, and we had a net change yesterday of about 10 pennies to the downside here, with implied volatility above 30% now, 31%. That's big. We weren't expecting volatility, but the only reason why is because There was expiration of the options contract yesterday, and the August contract expires today. So that's going to be a very volatile day here in natural gas. Again, 375 calls and puts trade. They narrow out the range 365 to 375, and that's what they want to see for expiration of the options. They got it yesterday, and I'm sure that's what we're going to be seeing in today's trade. Again, we can expect a little bit of a rebound from yesterday's 10-cent sell-off, and we can use that first R1 level, guys, that 374.20 as an upside target to the upside. As you can see, actually, you know what, I maybe spoke a little late here. Look at that. We already almost made it up there, so you can see making our way up to the that R1, 375, 374.20, and 374.5. So, alrighty, guys. Again, products also, RBOB and heating oil yesterday, they traded a little bit mixed as well, just like crude, a little bit lower, slightly lower, but we have to watch these products. We have to watch RBOB and heating oil. They are going to be our leading indication on crude today as we have our inventory numbers. Again, for crude, we're looking for negative 1.7 million. Gasoline, we're looking for 855,000, and distillate 600,000. With that, I'm going to throw it back over to JJ. Again, GDP is coming out in a half hour, and we're ready to rock and roll on a Wednesday morning.
All right, Marty. Thank you so much, my friend. As always, great job out there. Great job. Good to have you. Good to have you here with us, and thanks for all the great analysis. Guys, that does it for us today. I want to thank you all for coming in and joining us. As always, my name is Joseph James. I'm a lonely old day trader here at schooloftrade.com. I run a live trade room every morning at 8 a.m. Eastern Time. Looking forward to trading with you guys every morning as a member of School of Trade. You can contact me at jj@schooloftrade.com. And that was Marty Errico. Marty and his partner Jeffrey, they run a great broadcast every morning starting at 8:50 a.m. Log in with them, contact him, Marty at tradersaudio.com. And don't forget to say hi to the whole team over there at Traders Audio when you guys listen in. A great broadcast. As always, we're on a 23-hour and 30-minute break. We'll see you guys this time, same place, same time tomorrow. We got a Thirsty Thursday edition of our Crude Oil Squawk. This morning we went from the screen all the way to the floor. We've got some bullish tone in the market. We've got news starting us off at 8:30 this morning. And don't forget it, guys. You got to learn this stuff so you can earn with this stuff. Keep in touch. Ask us questions. Post comments for us on the blog. If you got any feedback, we're always listening. Thanks so much for coming out and joining us. We'll catch you here next time. Adios, amigos. Bye-bye for now.